You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block.
All right, everybody. That rockin' tune means it is time once again. It is Thursday. It is noon Central. It is 1 p.m. Eastern. It is time for the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you're listening to this program right now. Glad to see so many of you are enjoying and getting a lot of value out of our content these days. I know we're all pretty much stuck at home. We're all freaking out about the markets, so we're glad we could walk you off the ledge, arm you with a little bit of information, some education, hopefully a little bit of insight analysis, and maybe a bit of a distraction or two in there as well. If you like what you're hearing, make sure you keep leaving those reviews on your platforms of choice. New people are discovering our stuff all the time these days, as you might imagine. Help that process keep rolling. Leave those reviews out there. And, of course, however you listen, live after the fact, make sure you hit us up. Questions, comments, insights. You guys have been deluging us with questions. We're trying to get to all of them whenever we can. And hopefully you guys are enjoying the OPR, Question Palooza, to just hit the network this morning. So lots of your questions getting answered wherever we can. We'll hopefully get some more today as well. And joining me on the old program today, first off, let's go out to the far, far hinterlands of Maine, a.k.a. the options mecca of the U.S., where we are joined once again by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com, by way of Carmen Line Capital. Mr. G, welcome back to the program. Sir, how go things in the hinterlands?
Always a pleasure. The hinterlands, as you know, because I've been quarantining for 5 years, nothing's changed. Market's up, but VIX is 30. So I guess we'll get to all that. Things are good in Maine. Our governor might be a little goofy, but other than that, things are okay.
I think everyone's governor is a little goofy these days. It's not unique to Maine at all. And also joining us from a little bit closer to home, out in the hinterlands of Chicago, where we are joined once again from that scenic hamlet known as St. Charles, by Uncle Mike TOSAW from the appropriately named St. Charles Wealth Management. Uncle Mike, welcome back to the program to you as well, sir.
Always happy to be here, and I can also say that our governor might be a little goofy himself, but we don't want to get political on this show, but you could say that JB's a little goofy.
let's just be equal opportunity. They're all goofy. I think that's pretty much par for the course out there. You know who's not goofy, though? I guess we'll find out if she's goofy or not. Also joining us, holding down the TradeStation hot seat today. She's a newcomer to the program and indeed to the network. She is Sarah Potter, the Chief Education Officer over there at TradeStation, as well as the head of You Can Trade. Sarah, welcome to the Option Block.
Thanks for having me.
Well, Sarah, as we are wont to do with all of our first-timers here, why don't you go ahead and give us a little bit of an overview of your background in the financial space, as well as what the heck is You Can Trade, Sarah?
Yeah, happy to. So I have been an options and futures trader now for well over 10 years, and have been doing this, what started as a side hustle, part-time gig, and wanting to do this full-time turned into a full-time job. And then from there, built out an online business, which was You Can Trade. And so I trade live every day in front of everybody. People can see all the trades I place, everything I enter, everything I exit, everything I'm managing, why I'm making choices, all that stuff, all that good stuff. And so TradeStation is a new role for me is to be the Chief Education Officer in TradeStation, which I'm pretty excited about. And You Can Trade is now a subsidiary company of TradeStation, which means for everybody who is a retail trader themselves or an active investor, we have multiple channels of education and opportunities to see lots of different coaches trade live over at our website, youcantrade.com. And we also have a lot of courses for people to learn how to trade various trading assets, including options.
Great. We're always fans of education. Let's see what the market's up to today. Let's get into a little bit of the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. The Rock Lobster kind of let the cat out of the bag there. We are seeing a lot of green on the old screen today. It's another one of those days where apparently all is right with the world. All concerns are behind us. All the major indices up pretty strong today. Actually, NASDAQ and the S&P fighting for first place out there. S&P just taking it up about 1.75%. The NASDAQ 1.74%. Just a tick behind out there. The Dow is the laggard, up about 1.5%. Gold and crude also getting a lift as well. If you want to talk about gold and crude and a lot of other fun stuff, if you have questions on the commodity, indeed the futures options realm, send them in. Going to do a futures options feedback palooza coming up in a little bit on TWIFO a little bit later on today. And of course, our old friend VIX Cash come into showtime. It was around a 31, which puts it down about 6.5 handles. So quite a bit from where it was last show. It's even lower than that now. It's down about 30.75. So closing in and down about 7 handles from where it was this time last show. VVIX, same deal, come into showtime, was down about 6 points, down to about 116. And our old friend VXX, a.k.a. the product that usually likes to erode of late, hasn't been doing so. These days, getting a little bit of that erosion back. It's about 37 and about a third or so, which puts it down, about a little over 3, about almost 3.75 handles from where it was this time last show. So VXX getting a little bit of that erosion factor back. Sarah, you're a newcomer here. You're our guest, so we'll start with you. What are you seeing? What are the TradeStation clients up to? What is lighting up your tape over there at TradeStation today?
Well, I mean, there's a lot of action going on right now in the markets, and I'm long a few positions right now. So I'm kind of hoping the market's going to continue to go a little bit higher. But in terms of the S&P, and specifically, looking at that contract, I mean, I'm a little concerned that as we move up to that 2,900 level, we eke up to that 3,000 level, lining up with like the unemployment numbers we heard today. I'm worried that we're going to see the market pull back again. And so I'm kind of trying to pull off any of my long positions with profit and kind of wait to see if things are going to turn around. What we've been talking about in my trading room over at You Can Trade, like this morning we put on a MasterCard trade. And unfortunately for me, MasterCard decided to pull back a little bit. One of the few stocks they're pulling back today. So hopefully we can, everybody should start using their credit cards and maybe that'll help bring that stock back up.
There you go. We'll see if we can talk MasterCard back up here over the course of the show. But is it primarily underlying in your chat room? You kind of mentioned you kind of do all of the above, your futures and options as well. What are the primary vehicles you guys are trading in that chat room, in the trading room there?
Yeah, so I'm mostly doing, I love to do futures. Particularly these days I've been doing micros, the micro ES, first thing in the morning at the open. And then by about 10:30 when the market opens up a little bit more, that's where I'll start putting on some more calls. Been doing a lot of debit spreads and credit spreads. And most of the high beta stocks is typically where I am focused in on. And I mean, we even look at like a lot of the people at TradeStation and what they're trading. I mean, Tesla is a big name there that everybody seems to love and enjoy to trade. And I can see why. I mean, it offers so many different ways. You can take advantage of all sorts of option strategies when you're trading Tesla. I have also been involved in at the big names, Apple, Microsoft, and then I usually have a good old SPY trade that I happily rely on every week that seems to be working out quite well.
Well, since you mentioned futures, I have to ask you, I have to just pick your brain. Obviously, there's been a lot of turmoil in certain segments of the futures space. You probably got a lot of questions about this. I know we did. We were deluged with the whole madness of WTI going negative and, of course, its impact on a variety of other products out there like USO. What are your thoughts on how all of that went down and the wake of which we're seeing play out in the marketplace right now?
I don't know. I think, when we think about even just like the coronavirus, like the things that we're dealing with right now, I think are a little unprecedented. And certainly what came up with WTI was a good reminder that, anything can happen. And just as I'm sure we all never thought we'd be self-isolating for so long. So, I mean, I think it's, I think we have to remember there's a lot of risk in the market and anything can happen. And we can't be too complacent in just relying on patterns of what happened in history and expect things to be the same moving forward. I think we're in a whole new era here. And gosh, we'll see what happens with the S&P. I mean, maybe it'll have a big move one of these days, too.
That just shows you're new to the program. Andrew has been self-isolating for the better part of a decade. So this is old hat to him. He was self-isolating before it was cool, hence the compound in the hinterlands of Maine there. Well, I have invoked you, sir. I'm sure you're going to take umbrage at all of that, including the fact that you've been self-isolating for more than a decade. But that aside, sir, what is lighting up your tape out there today?
Yeah, I do. I trade from home. I work at Option Pit, help fund managers, investment advisors, everybody, learn how to trade options. What's lighting up the tape? We have some kind of funky contango in VIX, so, normally what happens, you get contango when the front end of vol starts getting cheaper in the near term. And all of a sudden we're getting this very strange, very high vol, but now the front end of the curve is moving into the 20s. Front end of SPX vol is moving into the 20s. It's kinking the curve. So you actually have higher vol expectation in the future, which is normal, but relatively lower vol in the front. So everything's mid-20s. I'm looking now to try to see if any of the forward vol is it keeps wanting to get into the teens. I haven't seen it yet, but it's really close. So vol point of view is it's crazy. It's just, again, we used to think 31 vol was pretty high, right? I don't know. Last year, vol apocalypse, whatever. 30 vol. And right now it is normal. It's the new normal. 30 is the new 12. And I don't know what the hell's going on. As far as the market goes, it is unbelievably resilient. And somehow people that buy stocks seem to think everything's just going to go back to normal. That's the only thing I can tell. And I think eventually it will. But it seems like there's just a lot of hurdles to get through. But from a vol point of view, just everybody has to remember this is still extremely high vol. Historically, it's a huge number. Even when we thought Europe was going to go to zero, it didn't stay this high in the 30s for this long. We had that 6-month period during the financial crisis, it was bobbing and shaking all over the place. So, and I think the numbers we're seeing, and the only thing I could think of is they're somehow throwing 10 times the money at this problem than they did the financial crisis. Give or take on, what the Fed's buying or if people are going to buy the assets back or whatever. So very confusing, high vol, but also look at the stocks that are still moving. Like all the internet stocks, service stocks, FSLY, all these crazy stocks are just ripping on earnings. So I think it's a very volatile market. I think anything around earnings is still really volatile. Look at the moves we've had. I think you're going to see a lot of earnings moves that we've seen have been way over the straddle. So it's still crazy town. But I don't think I can't remember seeing a vol curve look like this, where we have kind of a contango, those futures are higher than cash thing. And then, but the handle's 30. It's about to tick 29 maybe. So really, really interesting odd times. I'm just saying 30 vol is almost 2% per day. Average move in the S&P 500. So I agree with our new co-host that it's still a freaking crazy volatile market. So anyway, that's what all the pit guys, mostly they're doing a lot of earnings plays. And credit spreads, stuff like that. I just unwound kind of a funky strangle on the SPY on the move up today. Just all, I think still a lot of short-term vol is actually relatively inexpensive, given how a lot of stocks are moving. So, and that's where I am. Still, it's still oddball land.
Well, anytime you're involved, sir, it's going to be oddball land. That much is certain. And it's worth pointing out, we're talking about how much vol is down, but you're right, 30 VIX, I should say, really is still a lot of movement's got to be baked into the S&P to maintain that level. So we're well off the highs. We're certainly not at an 80 like we were a month and change ago. So people might look at that and say, oh, my God, vol has come in quite a bit, and certainly has. But it is by no means low or indeed cheap vol. We're not quite there yet, listeners. And Mr. Uncle Mike, sir, what is going on in that provincial hamlet of St. Charles, sir? What is lighting up your tape today?
All sorts of exciting stuff as I enjoy being in the sunny, tranquil hamlet of St. Charles. It's funny. I remember the most fearful I ever felt about higher vol was when we went over 40 for the first time in 2008. And I just remember, I've told the story on the show 100 times about how the crowd I was talking to at the time was just convinced that vol had to come down because it was so high. And of course, a couple months later, it went up to 80. And so I remember just thinking how insanely high that was. But now we're in the 30s and it feels really low. So I agree. It's definitely kind of a newer, weirder thing and a different type of world with which to live in. No doubt, no question on that. Some things that are lighting up my tape right now. I also agree with Sarah from the standpoint that we could be in for a little bit of a pullback, and that 2,900 is kind of a tough nut to crack for the S&P recently. So if you look at it, on there, we actually about a little over a week ago, we did go above it. Then we came back down all the way down to the 2,800 level and actually a little bit below that. But we actually have that as kind of a tough number. And so the other thing that I've been mentioning on the show before is that from the peak of where we were for our all-time highs to the trough of where we were to our all-time lows, back in late March, that would actually be a 60% retracement. And so with that, that typically can be a hard number to break through. And when we have that set up on such a large index like the S&P 500, it's something with which to be careful with. So I think we need to keep an eye on that. 2,900 is going to be a key number if we can get through there. I think that would be a big victory for those of us bulls out there. But for the time being, I think it's something with which we need to continue to keep an eye on. Now, for my aggressive trading, like I've said 100 times over the course of the last month, I'm 99.9% in cash right now with that. But for my risk reversals, for some of the hedge trading with which I'm doing, I actually am at a point right now to where I took off a short put today, actually. And took some profits on it. And so I was thinking, okay, maybe should I roll it up? Should I sell another one? I'm still in a long call. I can't say strike prices or expirations or anything due to compliance reasons. So I'm still in a long call at this point in time. But what I'm kind of waiting for is a little bit of movement, meaning if we have a downturn of 100 points in the SPX again, then I'll definitely be looking to sell short puts. Or if we have some type of extreme upward movement, well, I still have the long call in my back pocket. So kind of waiting for something along those lines, because I think if we do go above the 2,900 mark, I think we could have a lot more upside ahead, because the next stopping point that you could argue that I think would be a big stopping point would be around the 3,000 level, because there we're going to have to contend with the 200-day moving average, and we'll also have to contend with the 3,000 mark, which is a pretty significant number, which we stayed very close to for quite a while before getting through it 7 or 8 months ago. So those are the things with which I'm looking at. And, the NASDAQ actually, I think, went positive on the year earlier today. So that is my story, and I'm sticking to it.
Yes, how insane is that? Let that sink in for a little bit. Speaking of letting things sink in and impressive numbers, we are 1 day removed from the 10-year anniversary. Do you remember where you were back on May 6th of 2010? Yes, it was the big flash crash, and we've all digested it, discussed it for a decade now, a decade and a day out there. It was the first of many such shocks and iterations to come out there in the marketplace. Most recently, we're seeing them a few weeks ago. Circuit breakers triggered a little bit different scenario and circumstances behind it, but still, this was kind of maybe the herald, the harbinger to a lot of people out there that perhaps we were heading into a new era in the marketplace. I remember that day pretty vividly. I was a risk manager for an old market making firm that's not really around anymore, and we've been trying to meet up for ages, and we finally met up that day. We were going to go have lunch and maybe grab some cigars. In fact, we had just gotten our cigars. It was a beautiful day in Chicago. We were celebrating it. We lit up cigars, went down to the old one by the exchange and got the cigars and Schwartz. It was a grateful day. We just lit them up and started looking at our phones and realized, oh no, something's happening here. So here I was. I had dragged the poor risk manager out of the office on one of the worst days in recent memory, at least up until that point. So I always felt bad about that, even though it was kind of his fault. He insisted on doing it, but still. So needless to say, we both had to run back to our respective offices and take care of business. But it was an interesting day, an interesting time out there. Of course, the old Chinese proverb, may you live in interesting times. We're all living under that right now. Let's see how interesting the market is today, at least from an overall options volume perspective. Let's start in the big indices out there. Let's see, VIX coming into, as of a few minutes ago, was not quite 200,000 contracts, 194,000 contracts. That's decent paper, actually, in our new regime now, which an ADV of about 320,000. A far cry from the 1.5 million and beyond we were in an ADV not too long ago. SPY at about 2.15 million. The ADV a little bit shy of 5 million out there. The S at about 465,000 contracts. The ADV 1.1 million. The Qs 479,000 contracts. The ADV 751 out there. The IWM at about 333 exactly. The ADV 682 out there. So the Russell has been moving a lot of late. Let's see what's moving from an individual names. Let's break down the top 10 out here. Cost you 182,000 contracts to break into the top 10 right now. They get you all the way to Beyond Meat. Number 10. Number 9, Microsoft. Still in the top 10. Falling a little bit, but still in the top 10. It's getting usurped by a lot of these earnings names. Numbers 8 and 7, once again. These two similar tickers, neck and neck here in the top 10. I think there's got to be a little ticker confusion going on there. To keep these two always next to each other in the top 10 is kind of strange. Number 8, our friends across the street there, Boeing, 198,000 contracts. Number 7, Bank of America, 200,000 contracts even. Number 6, Uber. A lot of noise out in that space of late, 234,000 contracts. Number 5, Peloton. Peloton blowing the doors off these days. They went almost overnight from being kind of an overpriced luxury to effectively the only gym in the country. So what a lift this pandemic has been for them. If you're looking for a silver lining in all this madness and horrible news, it certainly can be found in Peloton. 243,000 contracts as of a few minutes ago. Then we got Wells Fargo at about 245. Square coming in there, 264. I believe their numbers actually weren't that good. And then Tesla, number 2, 281. I think Musk is going back on the Joe Rogan show. So watch out below there, Tesla bulls. We know what happened last time. And we do know he's not exactly shy about making outlandish statements these days. So we'll have to see what comes out of that. And number 1 with a bullet once again today is good old Fruit Company at about 386 100,000 contracts. As we mentioned before, it is earnings season. A lot of big names popping off this week. Monday, we had Tyson's and Lowe's. We had Tyson, a big name, obviously, to watch for what's going on with the food supply. Their CEO having been very outspoken. Tuesday, we had Marathon Oil, Disney. Interesting times. The parks obviously taking it on the chin, but Disney Plus has more subscribers than the population of Canada and Australia. So something along those lines. So, yeah, it kind of a little bit of a give and a little bit of a take out there. I don't think Disney Plus is making up for the parks yet. But interesting times. Beyond Meat was also on Tuesday. Activision Blizzard. Wednesday, we had CVS, GM, PayPal, Peloton, the aforementioned Peloton, as well as LYFT. And today we have JetBlue, Roku, Uber. Again, that's why they're lighting it up today. Dropbox and Hilton Worldwide. Some more names popping off tomorrow. Lots of numbers, again, coming out this week. You can check out theoptionsinsider.com for all the breakdowns, the earnings move results reports, and the earnings season reports. So let's look at some interesting numbers, though. Peloton obviously blowing the doors off, sales jumping 66% from a year ago. And the interesting things, people usually buy these things and they don't really use them. That's the case it is with all workout equipment. People are actually using it right now. They say their workouts jumped 81% since the last quarter. So I guess they always like to use weird metrics like the number of high fives delivered and stuff. So apparently people are liking their bikes. At least they need something to distract them right now. LYFT also up. They were up 15% in the after hours. Users grew 3% year on year. You wouldn't think a lot of lifting going on, not a lot of sharing going on in the current environment. Users grew 3%. Revenue per active rider grew 19%. So people are apparently paying more. Maybe some of that baked in, maybe some higher fees. Maybe there's a pandemic fee baked in there as well. These firms like their fees. So maybe that's a culprit as well. Beyond Meat was up 25% in the near blush out there. So obviously, when meat's having problems, faux meat going to get a little bit more interest, a little bit more attention. We need it because Wendy's reporting a good chunk of their locations were out of beef. So the old, where's the beef? Not so much for Wendy's out there these days. Let's look really quickly. There was, Tyson was earlier this week. They closed at $60 even as of the time of our earnings move report here. They were pricing in, looks like about 3.8% move, and they delivered nearly 9% to the downside there. So not exactly a good one. Again, that's kind of bucking the trend of underpricing the earnings vol these days. Everyone seems to be doing that, and at least so far, blown the doors off there on Tyson. A lot more to parse, dozens, if not hundreds of tickers for you guys to check out. TheOptionsInsider.com, the place to go. Click on that earnings. Click on the options articles and news tab actually first, and you'll see all the earnings analysis going on there, courtesy of our friends over there in Oras Land. Meanwhile, we got to keep rolling. It is time to unleash the Eye of Sauron. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we break down what's weird, what's wild, what's been lighting it up in the world of options today and indeed on some of our previous shows. Before we get to that really quickly, Mr. Rock Lobster, I've been informed that our old friend, the Vol Man, he's been up to some fun stuff. Anything good going on in Vol Man, and has his design, has it evolved since the last time we chatted, sir?
Well, see, the last Vol Man was using a telescope, and my Twitter followers were not really wondering. They're like, "That's a pretty weird looking telescope, dude." So there was some commenting on. So I realized that everybody's been in quarantine too long, and they're starting to look at Vol Man a little weird. He is just a stick figure, by the way. However,
everyone's a critic these days.
So anyway. So yeah, that's the the problem is when you harangue people on Twitter, they're going to harangue you back. So
Vol Man is now a pirate. That's what you're telling us. He needs a cool hat. That would be.
He has got a hat. Yes, he's got a hat and a telescope. Yes, hat and a telescope.
I'd be down for a cool pirate iteration of all things Vol Man. Let's see what we have in store for us today. Actually, we're going to kick things off going back a little bit. So, Mr. Rock Lobster, put your way back hat all the way on and dial it back to to February 6th. That's where we're going. To Dropbox, ticker symbol DBX. That's what we profiled on the show all the way back, the early days of February when all was right with the world, markets were rallying, skies were blue. Beautiful, tranquil, idyllic time, some might say. Let's see what we had on our radar that day. At the time, we profiled a 5,000 lot of the April 15 puts. They were going up for 50 cents. Paper was lifting the offer. This was opening over there on the Philly. Worth noting they had earnings coming up. They had earnings a few weeks later on the 20th of February. On the day this trade was profiled, the day we did the show, the stock closed at 18.26. So it seemed like some pretty straightforward, someone was real spooked about earnings coming up, and they were willing to shell out quite a bit. Actually, a lot more traded after this. A total of 15,000 of these puts traded on the day, most if not all of them lifting that offer out there. So someone was looking to get their hedge on and paying a decent amount, paying 50 cents to hedge on the 15 strike for an $18 stock. So they were paying some juice out there. It is worth noting, as this trade went on, they piled in even more. So they were more nervous than they apparently let on with the first trade. They did 15,000 the first day, then 6 days later on the 12th, another 10,000 traded. That's when these puts were down a bit. They were already down to 30 cents. So this guy who bought 15,000 50 cents, he was already wearing it for 20 cents at that point. And then he bought 22,000 more on the 28th of February. So actually this is post earnings, which is kind of interesting because earnings were on the 20th. On the 28th, he bought 22,000 more traded for 20 cents. That bumped the OI all the way up to 63,000 that were open on that strike. And guess where the stock closed at expiration? Again, these are loading up on the 15 puts, listeners. The stock closed at $19.18. So ironically, it looks like they were even more concerned post-earnings, not less, which is an interesting choice. And there were, of course, still 58,000 of these puts open as of expiration time, Mr. Rock Lobster. So it seems like, upon first blush, and on second and third blush as well, that someone threw away a whole lot of money hedging some downside that did not materialize here in Dropbox. Sir, is that your takeaway as well?
I'm thinking that this just was a big old, let's just call it a flaming put. It did not, it did not perform. We were trying to figure. I think we looked at this at first. I thought it might have been a line in the sand thing, but it was not at all. So they kept wanting them, and it never really happened. Now it's $21. Holy gosh! What is this coronavirus thing? Stocks don't care. Except for a couple, or actually, let's say anything that's not technology, any tech company, nobody cares. But I think they burned a lot of money on these.
Yeah, it seems that way. Hopefully, we could look at it charitably and maybe try to hope that they were selling these puts, but I don't think that was the case. I think they hemorrhaged a lot of money to the tune of about 60,000 of these puts for not quite all of them 50 cents, but they averaged in probably around 30-odd cents, all things considered. And that's a rough way to go for this one. Let's see if we can turn it around here. We'll see how this one performs. Going a little bit farther out for our next one. This is a newcomer, Mr. Rocklops. I don't believe we've talked about this one before. This is Sunrun Inc., ticker symbol RUN. Surprising RUN was available, and someone, like an Adidas or Nike or something hadn't grabbed one of those up in the past, but RUN was available. Sunrun has it. This is, if you're wondering, this is a provider of residential solar electricity headquartered out in San Fran. And again, the trading today, $14 even, up not quite 1% on the day here. This is a name that over the course of the past year was trading $16.75 a year ago, so a wee bit north of where it is right now. It traded up to nearly 20, actually a little bit over $20 in July. Then it kind of sold off again down to about 14 and change, kind of hovered around that level for a while, and then rallied hard at pretty much exactly the worst time to rally. It rallied hard going into early to mid-February, got up to $23.50 about on February 20th, and then promptly gave it all back over the subsequent weeks. Got down to $7.84 at one point there in the height of the madness in March. So that's a pretty rough turn of events from $23 down to $7 and change in the span of just a few weeks. So rough deal. They, of course, have rallied since then. They peaked out at about $14.80 about a week and change ago, and now they're down about $1 from that, right around $13.95 to $14 or so right now. So that's where we've been in Sunrun. Let's see what our Eye of Sauron found for us out here today. It's on the call side of the fence, but not looking like perhaps you might expect. Not looking like someone swinging for the fences like we see a lot in the odd block here. Looks like someone deciding that this recent rally is perhaps a bit overdone, and if we get back to those $18 levels, they're willing to dump it. So they came out and dumped about 3,000 of these Nove 18 calls for $1.45. These were a dime off the bid. They were $1.35 at $1.90. Going up over there on the Amex over there. This is post earnings for these guys out here as well. Worth noting. Mr. Rocklops, looks like we got our old school harvest, a little bit of the old risk premium, and doing a little bit of overwriting, thinking maybe the days of breaking the 23 handle in Sunrun are behind us, or is that you concurring with that?
Yeah, that's, you know what, that's, don't you find a right that far out? I mean, I know vol's high, there's been a lot of vol opportunity, but it's kind of I don't know. Well, I guess it's $14 now, but it's just selling a Nove call out there against stock. I guess it's a yield play. Just that never gets me very excited. You know, you're going to hold the stock for 4 months and then you get taken out a couple bucks higher. I don't know. It's not my favorite type of trade, as you know. If you're going to buy a stock, you might as well, you know, you want to make money when it goes up. I can see short-term rides, but the long-term ones are not. They don't thrill me. They don't get me excited.
How did I know this is going to be in one of your favorite categories? So we won't put this in our to be watched category. I think we can probably intuit how this one's going to work out. I'm with you. I'm not exactly super excited about long-term call rights either. I know a lot of advisors and asset managers that like to do it. It's kind of a set it and forget it yield play, but we've said it many times, not exactly our favorite trade. Let's wrap it up, see if we can get something a little bit different here. Let's go back. This is a frequent offender out here. This is NRG Energy. It's been a little while since we've talked about them on the show. Ticker symbol appropriately enough, NRG. Trading right now about 32, even off about 75 cents or about 2.25%. This is the name that a year ago was trading about 38 and change, so a wee bit higher than it is right now. And it kind of hovered around those levels, down to 33 and then up to about 38, 39 throughout most of the year. Broke 40 briefly towards the end of last year, and then it kind of hovered at that level. It was almost exactly $40 on February 18th, and then we all know what happened. Massive sell-off followed, got down to about 19.5 in the height of the madness in March, and then it has since rebounded all the way back up, got up to about almost $35 and sold off again recently down to where it is right now, right about 32 even out there. Let's see what our Eye of Sauron has flagged for us today. It looks like it's puts, and looks like someone liking himself some puts to the tune of the June 27 puts, so about $5 out of the money puts, going up for 59 cents here, 2,500 times over here. These are, again, post-earnings here as well. They are today. The earnings were today before the open, so someone waiting for the earnings and then getting themselves some put action out here, which is kind of interesting. Mr. Rock Lobster, a little bit longer term, not quite as long term as November, but a little bit longer term than the weeklies. Getting a little bit of a hedge. At least this guy got himself a few months for his 50 cents as opposed to the other guy we talked about earlier who didn't get a heck of a lot of time for his 50-odd cents and then went against him pretty quickly. But what are your thoughts on this little bit longer term downside put love here in NRG Energy?
In NERG? NRG NERG?
In NERG,
I just like
yes.
NERG. I don't know why, just because it is funny. I look at this and I'm thinking dividend cut, maybe. I'm trying to the energy companies have kind of held up relatively well, even though I guess everybody's at home just watching Netflix or something. But like buy and put in energy, they're going to raise rates. I don't know. It's like I think it could be. I would just look at this as maybe a dividend cut play or something like that. Just because the stock doesn't really go down. Why would you spend a lot of money on out of the money puts unless something major like a dividend cut or something like that's going to happen? So sure, it could go down, but you look at it and you just think, you're going to buy the June 27 puts in NRG, and the stock is trading 32. I don't know. It feels like I would rather sell those bad boys. You know what I mean?
How did I know this one also not going to be your favorite of the bunch? So I think we've got two that we're probably not going to return to, listeners. But we did get the chance to return to our February 6th play, and unfortunately, it looks like our friend there hemorrhaging a lot of money. Let's see if you guys can do a little bit better. It's Thursday. It's mail block time, so let's get to it, answering some of your questions.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, it's Thursday. You guys know the drill. We open up the floodgates to you guys. Whatever you have on your brains, your questions, your comments, your insights, you know how to find us on all the major social media platforms. Just look for ad options on the website, theoptionsinsider.com. You can use the old-fashioned way, questions at theoptionsinsider.com. If you want to go the rock lobster way, send a smoke signal, carrier pigeon. We can maybe work that into our rotation out there as well. But let's start out there in TradeStation land again. Sarah, you've been out there doing the live trading every day, engaging with the clientele, the active end of the clientele over there in TradeStation land. You hearing any interesting questions, any interesting comments from these folks out there as you're engaging with them? Anything kind of really resonating with you as we're heading into the mail block here?
Yeah, I think everyone's wondering if you're all at home, are people trading more? Certainly, we've got way more people that are trading in my trading room with me every day these days. You know, there's a lot of people that subscribe to You Can Trade, and I think they just use our text trading service. So, like when I enter a trade myself, I also send it out on a text so that other people can get them if they want to as well. And so normally a lot of people in the trading room just use the text, but everyone's at home, so they're all showing up live every day. So I think that's certainly affecting. I think more people are putting on more trades because they're in front of their computer and they're just looking for things to do, and trading. The markets are moving, so there's lots of opportunities. One question I'm getting a lot and hearing a lot about is people really want to know, like, how do you deal with this? Like, how do we deal with the increased prices of the options? So as the market is so volatile, how can you compensate a little bit, especially if you're dealing with a smaller account, or can I leverage some of those options so that you're not putting on this huge amount of risk on something? Sure, it works really well. You know, you buy an expensive option, it moves in the direction you want. Well, that's ideal. But what happens when you place a trade in something and then all of a sudden it goes the wrong way and it costs so much for you to buy that option? So, I mean, what do you do and how do you compensate for that? And one of the elements that I would say, and I kind of try to help people, is, you know, when I'm trading right now, one way that I've accommodated based on the prices of options right now is to reduce the expiry. So I'm not involved. I'm actually quite active in the market right now, and I'm not really sitting in options that expire in anything longer than about 2 weeks. So keeping those options trades quite tight in terms of expiry, because what I want to be able to do is if I put a trade on and it works, fantastic, you know, but a weekend and move the other way, I want to be able to make some adjustments or to be able to roll without having too much risk all in one trade. So I've been using really tight expirations. Even in my SPY trades, actually, we've been actually trading the same week or looking for a lot of day or 24-hour kind of styles of trading.
That makes sense. That's something we've been advocating here on the network for some time. You know, staying nimble, staying small, not exactly doing the old set in and forget it trade, but actually keeping an eye on your positions. We all have more time to pay attention to these things these days. So even your day job may not be exactly your full day job right now, so you have more time for trading, in which case you have time to pay attention. Again, maybe we get to maybe the other side of that is the other flip side of the coin. We'll get to that in a little bit. Looks like we have a listener question about maybe being too active out there. But yeah, these are times you definitely want to stay nimble, stay safe. We've been saying that for ages. Stay small, stay nimble, stay safe out there. I think that's wise words to have in these markets out here. Let's see what you guys have on the brain. Let's go out to YouTube first. More and more of you liking the YouTube out there. Again, it was never our intended outlet. It's just something it goes out there automated, but you guys like it. You like seeing a little static GIF image of the show while you're listening to it. That's fine. We know most of YouTube is listening these days anyway. So if you guys are liking it, and it sounds like this listener, Cal, or maybe Call. Maybe he's a call, like call option. Let's go with Call. Call. He listened to episode 897, A Tale of Two Markets, and he just wrote in to say he loved it. Well, thank you, Call, We love you and everybody else who's liking it on the old YouTubes and everywhere else. However you like it, hit us up. You know, we don't judge. You want to listen to it on 2 tin cans on the back of a donkey cart, we don't judge. As long as you're listening, commenting, sending in questions, listening live, all that fun stuff. We do love hearing from you guys. This comes in from JR. It's kind of what I was just alluding to. This is kind of the flip side of what you were just talking about there, Sarah, which is, is there such a thing as trading too much? I think I have a problem. Well, you know what they say about having a problem, right? The first step is admitting you have a problem and then going from there. But no, we have seen this many times here. People have sent in. Usually it goes like this. Here's my trade. What's going on with this? Why didn't it work? And they send us this screed, this litany of trades. And you can see it started out with one kind of simple, clear agenda. Maybe it was a vertical or something else like that. And then they proceeded to adjust and add a leg here and adjust this thing and add a ratio here. And before you know it, it's become this Franken monstrosity. It doesn't really seem to have any clear agenda to it, any clear outlook to it, or any clear reasoning behind it. It really is just a monstrosity, and that is a case of really probably too much trading. So we have seen that many times. I'm curious, Sarah, you have active folks in your chat room, so I'm guessing this is a situation you encounter frequently. What do you have to say for JR and others out there who want to know, is there such a thing as trading too much?
Yes. Yes, there is. And you got to be really good at saying, you know what, I've made money today. Don't give that money back to the market. So I always kind of like to think about, you know, how many trades do you have on? How much do you really want to be risking? And how much are you looking to make out of it? And if you've hit your targets, then walk away from that computer screen, my friend, and go enjoy the rest of the day. We're all trading because we want to have flexibility in our lives. And if the market just kind of sucks you into it, and then you end up sitting in front of your computer all day, I think that kind of defeats the purpose of why you're probably trading, because you probably want to trade so you can go have fun and golf and, do whatever you want to do during the day. So yes, you absolutely can. Don't give back your money once you've had a win. If you've had a big winner in the morning, you don't feel you need to put on another trade.
All right, let's keep on rolling. See what else you guys have on the brain. Frequent listener and commenter. I think he comments about every episode here. Scott Sommer, he's chiming in, says, Are you trading 0 days to expiration iron condors while your account is under 25,000? He says, then be aware of the rules and close before either long goes no bid, or you will be assessed 2 trades for that one trade. Interesting. It's not a scenario I've thought about or encountered recently. I'll have to check that out. Scott usually has decent stuff, so I'll have to take his word on this one for now. I'll have to go check it out. But there you go. Some words of warning. If you got iron condors expiring soon, keep an eye on your legs out there before they go no bid. You're going to get extra commissions heading your way, it sounds like. All right, New York Doe wants to just chime in. Oh, he's talking about, we were talking about before with Wendy's, the meat, the beef. I think the 1,400 locations now no longer have meat to serve in their restaurants. And he sent in a fun gif of, looks like a steak with legs, kind of like your Vol Man, Mr. Rock Lobster, a stick figure steak with legs. And he's kind of dancing. And he just says, but where's the beef? I just thought that was funny. I like the artistic side of our audience out there. We asked you guys as well for some of our other shows and for this one as well. What topics, educationally wise, do you want us to discuss? We had a bunch of suggestions. Some of you chiming in. Jay4340 said you want to see ratio spreads with puts. Well, if that's what you want, Jay, you're in luck. Go check out one of the most recent, I think it's not this most recent one, but the one before it, of Options Bootcamp. We did a whole episode just about ratio put spreads. So perfect timing. Check that one out if that's the case. And then another frequent listener, Mr. Mark Brandt out there, he says he wants to know about optimal iron condor management. Another one who's got iron condors on the brain. We got Scott, iron condors, and a lot of our frequent listeners have iron condors. Maybe we should do a refresher on iron condors. Those used to be really hot, like 6 or 8 years ago. Everyone was talking condors, and it seems like the love behind them kind of faded, but maybe it's coming back. Maybe we need to do some iron condor adjustments. I'll have to go find Mr. Jared Woodard over there. He used to run Condor Options. He was Mr. Iron Condor for a while. See if he has any thoughts on optimal iron condor management. All right, let's keep on rolling here. Chris is chiming in. This is from the last show. We had the Greasy Meatball on with us, and he was joking that seems like people these days spend more time learning how to make mac and cheese than they do how to trade options. And he's commenting on that. Chris saying, I thought people had to read the following before trading options, and he sent in a GIF of the characteristics and risks of standardized options. If you've traded options, listeners, gotten approved for a brokerage account, you know what I'm talking about. That red and gray little brochure. It's scintillating reading that the brokers have to send you to cover their butt from a compliance perspective. Yes, you are supposed to have read that. I know most people probably have not, but an exciting one nonetheless. Let's see. We've got time for, I want to get to some other topics here as well. Let's see if we can squeeze in a quick one here, asking about beyond unusual activity. I don't know if we have time for that. Oh, that's a long one too. Let's go to, real quick, NLX. NLX wants to know, I know there was a lot of talk of selling the November bump in VIX futures. Is that still a thing now, or have the election concerns been trumped, in quotes? I see what you did there. Trumped by all things COVID-19. Mr. Rock Lobster, we were talking about this on Vol Views not too long ago. Before all this madness really unfolded, we were all kind of fixated on the November election bump that had appeared there in the VIX futures curve. Obviously, since then, other matters have taken precedence. What are your thoughts on that Nov bump, and how is it shaping up now compared to what it was a few months ago, sir?
Well, it's still, I think it's the October bump. It's the October future is the thing that's bumped. Which I still find is odd, which means that traders still think that the vol going into the cycle is going to carry into the October expiration, which I'm not quite so, I'm still not sure that's going to happen, but I could totally be wrong. Because you still got, you're going to have to see quite a bit of vol. The market's going to have to move quite a bit because that November option has to be up there. So it's still there, but before the vol-apocalypse, it was 20. I think it was 20 and a half, the future, and it's 32 right now. So it was very, it was kind of close to the, VIX average, which was normal for even 9 months away. But the bump is still there, but now it's about to be one of the most expensive futures out there, quite soon. The biggest thing is I think it's affecting ZIV. Even though VIX has come down quite a bit in the last, we've had quite a move down in VIX. ZIV is kind of, which is the other four contracts, month 4 through 7. It's still below where it was a week or two ago. So that contract is still holding up, and it really hasn't loosened up yet. So we'll see if it does. I don't know. Maybe it stays at a 30 for until the election. I don't think it will, but it's pretty darn high.
All right, we'll see what we're all watching for the rest of this week as we head on into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we break down what we're keeping an eye on for the rest of this week into the weekend. Uncle Mike, sir, what are you watching for the rest of this week into the weekend?
Well, definitely watching the 2,900 mark. I want to just remind all of our listeners, be very careful. Weekend risk is a very real thing. Bad stuff can happen on the weekend, so make sure you're prepared for it. Not saying don't trade, but if you're expecting that the weekend's going to do nothing, then you might be in for a surprise. I don't know, but just prepare for it nonetheless.
Yeah, weekend risk is very literal these days, so if you got one of these guys who likes to harvest a lot of premium and leave a lot of shorts on over the weekend, maybe you be judicious about that these days, because we've seen many things popping off in the weekends and indeed in the after hours that you can't really do much about. So if you don't want to get caught that way, and if the last few months haven't really rammed that lesson home for you yet, definitely be judicious over the weekend. Mr. Rock Lobster, same question for you. What are you watching for the rest of this week into the weekend?
What's going on? Like, can vol get lower? It seems like it's stuck here with the market up, and it's really weird. It's like no matter how bad the news gets, it doesn't seem to hasn't really affected the stocks much in the last month, right? Because we've bounced off the bottom for the last month. So it's really odd to see what kind of movement we get out of all this. So that's, most of the earnings are out. So like, what's the news driving stocks? I think the biggest driver is states are opening up, and I think that's just going to end up dominating. And the faster people get back to work, however that works, I think the better things will get. So I think the market has run ahead of that a little bit, but hopefully it goes well.
Hopefully, indeed. Unfortunately, listeners, that music means we've come to the end. Another epic journey through the world of options. Got to answer a bunch of your questions. Always love doing that. Probably going to do some more of that on TWIFO coming up in a little bit. But before we go, let's go back around the horn. Let's check in with each of our cohorts, see what they have cooking that may interest you. Let's start in the land of Uncle Mike yet again. Mr. Uncle Mike, sir, I want someone to hold my hand through these tumultuous markets. Where should I go? What should I do?
Well, go to stcharleswealth.com if you're looking for a financial advisor who will work with you very closely, or not closely at all if you don't want to, but someone who will see things in a different light, someone who's actually not afraid to use options for wealth management. Contact me, 630-885-0017, or go to my website, stcharleswealth.com.
There you go, stcharleswealth.com, the place to go to begin your journey. And Mr. Rock Lobster, if I want a little bit of education out there in terms of what's going on in all things options and volatility, where should I go? What should I do?
Come to optionpit.com, join one of our groups. We have a new one, the Trading Legion. So it's mentoring, individual mentoring, and group mentoring sessions to help people learn how this volatility stuff works.
There you go, optionpit.com. And if you like to kick the tires and light the fires on what Sarah and Andrew and everyone else has been talking about here in the old TradeStation hot seat, the place to go, TradeStation.com/options insider. People are always asking us, hey, you guys don't sell anything. What can we do to come in and help support you guys? Well, one thing you can always do is check out our sponsors. They're on the show to reach out to you guys. So head on over to TradeStation.com/options insider. They're giving you cash rewards for opening up accounts over there. So if you like what you're hearing here, you want to kick the tires, maybe you want to check out a new broker. These days, people are checking out new brokers all the time. Use that one so TradeStation knows you're coming from the show. That'll help them out. They'll be thankful. That'll help us out. Everyone's happy over there. TradeStation.com/options insider. Support them because they support us. It's a virtuous cycle at the end of the day. And on behalf of the Rock Lobster and Mr. Uncle Mike and Sarah and indeed myself, I want to thank all of you out there for downloading, for streaming, for subscribing, for sending in so many great questions. We'll get to more of them coming up on TWIFO. If you're listening live, stay tuned. You're going to get a fun double dose. You're going to get options playbook, I think, going in there. Maybe options boot camp as well. See if we can squeeze it in. So all kinds of fun stuff hitting there as well. And we'll be back in exactly a half an hour to talk a bunch of your questions, movers and shakers, what the hell is going on in crude, and a bunch more on TWIFO in a little bit. Then we're back tomorrow. Volatility Views, 1 p.m. Central, 2 p.m. Eastern. And we kick it all off again on Monday with more of the Option Block.
The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit TradeStation.com/Options Insider. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.